Despite some indications that the economy is recovering, the housing market remains a disaster area. Currently, about 7 million homeowners are behind on their mortgages, and that number's only getting worse. Banks, with the help of the government, are offering some relief to homeowners who've lost jobs and just can't meet their payments. But there's a growing number who can pay but are simply walking away from houses that are now worth as little as half of what they paid for them. It's called strategic default. People have done the math and decided making those monthly payments is just throwing money away, leaving the mortgage holders, the banks, as zookeepers of an ever-growing parade of white elephants. Among them, Chris Diener and his wife Dana of Sun City, Arizona. West Foothill Drive has become a street of shattered dreams. When Diener, an auditor for a local university, bought his 3-bedroom house in 2006 for $262,000, he thought he got a bargain.
First-time home buyers, we don't know, houses are overvalued. We just know we need to get in before it keeps going up and up and up.
And then?
And then, boom.
The balloon burst. So how much does he think he could get for that $262,000 house today?
Right now, about $142,000.
That's a big drop.
Big drop. Over 43%.
Diener and his house were, as they say, underwater. With a mortgage of about $250,000 on a home worth less than $150,000, he has one very expensive lemon. He says he tried to talk his bank into renegotiating his mortgage, but because he earns enough to keep paying, the bank said no deal.
They refused to. They said it was going to affect my credit and they were going to take my house, and I pretty much said go for it.
But you can afford to stay here, correct?
I could, yeah.
But he chose not to. He's walking away. That lemon of a house is now the bank's problem. And because Diener, like many Americans, only made a 10% down payment on his home, taking a hike is a lot easier. By law in Arizona and 9 other states, the bank cannot go after any of his other assets. But his credit rating will suffer. Aren't you fearful that you're going to get a reputation as being a deadbeat?
Yeah. But with the money savings that I will have in 4 to 6 years, I'm confident I will have enough money to buy my way into a house if I want.
So you don't feel even a twinge of guilt?
No, especially after dealing with my lender, trying to contact them. None at all.
Neither do Jean Ellen Schulich and Danny Kuhn. They bought their Phoenix bungalow 3 years ago for nearly $400,000. The bank now values it at $85,000. Even though they can afford the mortgage payments, they felt they were trying to bail out a notion with a bucket.
No logical business person would do anything other than walk away. And so there was a lot of soul searching, and I did a lot of crying because I'm in love with this house. And every day I would redo the math and think, maybe we missed something. Maybe, this just can't be right.
But it was. The value of their house was dropping anywhere from $5,000 to $8,000 a month. So Schulich and Kuhn just felt it was time to walk away.
I don't think we're villains. We fulfilled the parts of our contract that we have with the bank. We've let them know what we're doing. It's all legal. It's not anything I ever expected I would be doing, and it sure doesn't feel good, but it seems like it's the right thing to do.
What do your neighbors make of it? Another empty house brings down the value of everyone's house.
And we've seen that here. I think they will be upset, and I understand that.
Yeah.
But you're hardly alone in Phoenix right now.
True.
It's interesting, the number of my coworkers who have approached me to say, how are you doing this? Because I need to do it.
The Southwest has become an inland ocean of bad mortgage debt. Here in Arizona, a full 50% of houses are underwater. And next door in Nevada, it's even worse. 65% of houses there are drowning, and the water's rising. And it's not just the Southwest. More than 11 million homeowners across the country are underwater. It's estimated that number could double in the next year, which means nearly half of all American mortgage holders will owe more on their homes than those homes are currently worth.
We've been through an event that none of us have ever experienced in this country since the Depression.
To try to stem the tide of foreclosures, the Commissioner of the Federal Housing Administration, David Stevens, says the Obama administration has set aside billions to give banks the incentive to help struggling and underwater borrowers with their mortgages. But banks have been slow to modify the terms of those loans.
The fact of the matter is, these programs are designed to affect those who are most at risk, who are unable to make their payments. And it does require the investor, the servicer, to participate.
The decision to walk away from the sinking home by people who can't afford to pay is spreading like a virus. Because if one person in the street does it, the next door neighbor says, what am I doing? Why am I putting all this money into this almost worthless house?
The concern has to be, for someone who's going to take that move, is that they have to be so deeply in negative equity that they're willing to damage their credit, damage their financial reputation going forward. If you get foreclosed on in your home, you walk away from your mortgage, when you could have afforded it particularly, that's going to follow that family for years to come.
Brent White, a law professor at the University of Arizona, says the moral issue is beside the point. In a controversial academic paper, he wrote that government and the banks exploit people's sense of shame to keep them from defaulting. White says more people should be walking.
You won't find a time in history where this many Americans were underwater on their mortgage. You won't find a time where this many people's homes are worth half of what they pay for their homes. These are unique times and things are different.
I mean, as a child of the Depression, let me tell you that the most shameful thing that could happen to you was to lose your house.
My argument is, in fact, that people feel too shameful about letting go of their home. And in fact, people might be better off making economic decisions, rational decisions in their best interest.
White says big businesses make such bottom-line decisions all the time. Morgan Stanley walked away from 5 San Francisco office buildings they bought at the height of the boom. And real estate developer Tishman Speyer defaulted on the huge $5.4 billion Stuyvesant Town apartment complex in New York City earlier this year when its value fell by nearly half, making it one of the biggest walkaways in real estate history. It's a trend the banks fear could catch on with average homeowners. Already, the CEO of Citibank's mortgage unit estimates that 1 in 5 borrowers who default on their mortgages are able to pay. If that number rises, it could jeopardize any economic recovery. No bank we contacted would talk publicly about strategic defaults, but all indicated they'd be unwilling in most cases to help underwater homeowners who can't afford to keep up their payments. And Commissioner Stevens agrees with the banks.
To simply allow anybody who just decides they don't want their home anymore, who signed a contract to purchase a home, to walk away and get some sort of write-off with a program backed by the administration or a financial institution, creates a whole new set of standards that will live with us for years to come. The question is, who pays that bill?
For now, that bill is being paid by people like businessman Tom Hansen of Scottsdale, Arizona. He bought his dream house on Gold Dust Avenue 5 years ago. Much of the gold has evaporated, and he's left with a pile of dust.
I paid $1.2 million for the house.
What's its value today?
$850,000, if you can sell it.
While his friends are urging him to unload that monkey on his back, Hansen just can't bring himself to do it yet.
I just would not be comfortable walking away. And so, you know, maybe at some point in time, I will walk away. But right now, I'm not.
What you're saying is it really comes down to conscience.
I think it does.
But the Deaners, who stopped paying their mortgage 5 months ago, plan to stay in their house for free until the bank forecloses in July. Then, with all the money they save, they plan to rent a nicer, cheaper house for a few years while his credit recovers. You know, there are people saying if everybody did what you're doing, the country would be in even bigger, deeper trouble than it is right now.
if that starts happening, that's for the professionals to figure out.
How did you used to feel about people who walked away?
I thought initially it was immoral. My family raised me to believe that you should take care of your contract liabilities and your debt. That's how I was brought up to be.
Live within your means.
Live within your means, yeah. And that's what I've done.
So you don't feel any responsibility for it?
Unfortunately, no, I don't.